I call this meeting to order. Welcome to meeting number 4 of the House of Commons Standing Committee on Finance. I know the chair occupant looks a little bit different than what's normal. Our chair is observing Yom Kippur today, and I'll just take this opportunity to wish all of our Jewish friends a very blessed Yom Kippur. Today's meeting is taking place in a hybrid format. I would like to remind participants of the following points. Before speaking, please wait until I recognize you. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. For those on Zoom, at the bottom of your screen, you can select the appropriate channel for interpretation, either Floor, English, or French. For those in the room, you can use the earpiece and select the desired channel. For members participating in person or via Zoom, please raise your hand if you wish to speak. The committee clerks and I will do the best we can to maintain consolidated speaking order. A reminder that all comments should be addressed through the chair. Pursuant to the order of reference of Thursday, June 12, 2025, the committee shall commence consideration of Bill C4, an act respecting certain affordability measures for Canadians and other measures. I would like to welcome our witnesses, and if the witnesses can just start and go around and introduce your name and your department.
Hello, Stephanie Lane, Executive Director of Legislative Governments at Environment and Climate Change Canada.
Judy Meltzer, Associate ADM of the Environmental Protection Branch at Environment and Climate Change Canada.
Louisa Rizzo, GST HST Rulings Director at the Canada Revenue Agency.
Amanda Riddell, Director of the Real Property and Financial Institutions Section at Finance Canada.
Bonjour, Gervais Coulombe, Directeur
Hello,
Général.
Gervais Coulombe, Director General, Legislation, Sales, Tax Division, Finance Canada.
Formans, Director of Excise Policy at the Department of Finance Canada.
Stefania Bartucci, Director of Strategic Projects and Personal Income Tax Division at Finance Canada.
Lindsay Guire, Director General of the Tax Legislation Division at the Department of Finance.
Kathy Hawara, Assistant Secretary to the Cabinet, Machinery of Government and Democratic Institutions at PCO.
Okay. I'm Isabelle Brault. Je suis Directrice Générale de la Politique.
I'm Director General of Regulatory Policy at the CRA.
Thank you to the witnesses. So it's my understanding the Department of Finance will be opening with the 5-minute remarks. I believe there's 2 of you, Gervais and Stefania. So I'll just open the floor to you. Then we'll get right into questions. Thank you.
Okay. Well, thank you for the invitation to be here today. I'm here to speak on Part 1 of the bill. So Part 1 of Bill C4 lowers the first personal income tax rate, which applies on taxable income up to $57,375 in 2025, from 15% to 14%, effective July 1st, 2025. You'll note in the legislation there are 2 rates. Since income is reported and taxes calculated on an annual basis, the full year tax rate for 2025 would be 14.5% to reflect the tax rate cut coming into force halfway through the year. And the full year rate for 2026 and future tax years would be 14%. In terms of administration, the Canada Revenue Agency has updated its withholdings tables and its communications with employers and pay administrators to reflect the rate reduction. So since July 1st, individuals with employment income or other income subject to source deductions could have tax withheld at 14% for the second half of this year. Otherwise, individuals will realize the tax relief when they file in the spring. This change is expected to benefit nearly 22 million Canadians. Individuals who benefit would receive tax relief of up to $420 in 2026, the first full year where the rate will be 14%. And 2-income families would receive relief of up to $840. And tax savings for 2025 are expected to be roughly half this amount. Thank you.
Thank you, and thank you for having us. Part 2 of the bill introduces the first-time homebuyers GST rebate. That rebate will provide a rebate of up to $50,000 for new homes priced up to $1 million, amounting effectively to a full relief of the 5% GST. For new homes priced between $1 and $1.5 million, the maximum $50,000 rebate will be phased out in a linear manner. Namely, a rebate of $40,000 would be available on homes priced at $1.1 million. A $30,000 rebate would be available for homes priced at $1.2 million, and so forth, and no rebate will be available for homes priced at $1.5 million and above. The measure will generally be available to eligible first-time home buyers as newly defined in the proposed amendments. De façon générale, le remboursement...
The rebate, generally speaking, will apply to the same type of housing eligible for the existing GST, new housing rebate, including new homes, condos, units purchased from a builder, owner-build homes, and a share of a cooperative housing corporation. The measure would generally apply to purchases under agreement entered on or after May 27, 25. You will recall that the NWMM was tabled in the House by Minister Champagne on May 27th. I should add that this is a temporary measure.
The GGPPA. To permanently repeal the federal fuel charge framework under Part 1 of that statute. The fuel charge applied until March 2025 in 8 provinces and 2 territories across Canada. Regulations to cease the application of the fuel charge were published in Part 2 of the Canada Gazette on March 15 of this year. Part 3 introduces legislative amendments which would repeal the fuel charge in 4 phases to ensure an orderly process for charge payers and the Canada Revenue Agency. Plus spécifiquement, au 1er avril...
More specifically, effective April 1st, 2025, charging provisions would be retroactively repealed to reflect in legislation what has already been accomplished by regulations. The first step today, all rebate provisions will be repealed except rebates for charges paid in errors or rebates for reassessment. Effective November 1, 25, all registration provisions will be repealed. This gives registrants until October 31st, 25 to file returns for claim rebates arising before October 1st. And finally, effective April 1, 2035, the remaining provisions of Part 1 of the GGPPA would be repealed.
2 and 3. Mr. Chair, I don't know if you want to turn over to PCO for a very quick overview of Part 4. Thank you.
Thank you for inviting me today. Part 4 of the bill seeks to clarify Parliament's intent that the activities of federal political parties involving personal information fall exclusively under federal jurisdiction and more specifically the Canada Elections Act. It would further clarify that this has been the case since May 31st, 2000. Finally, the bill proposes some new additional requirements that political parties would need to meet with respect to their policies on privacy. Thank you.
Okay, so we'll start our first round of questioning. Mr. Kelly for 6 minutes.
Thank you, Mr. Chair, and thank you to officials for attending today. The Parliamentary Budget Officer has just released a damning report, and he delivered some fairly shocking testimony last week at the Government Operations Committee. Now, this bill, which is titled as an affordability measure for Canadians, but Canadians face a staggeringly high cost of living fueled by inflation that are triggered by deficits. Can I confirm then, if the department agrees with the Parliamentary Budget Officer, the affordability measures here boil down to something under $200 a year per Canadian family? Is that correct?
Hi, thanks for the question. I can speak to tax savings related to the reduction in the first personal income tax rate, which could be as high as $420 in 2026 or about half that in 2025. So that's potential savings from that measure.
Okay, that is, if I understood you correctly, I think you said that's the absolute maximum savings.
That would be the maximum.
Okay,
yeah.
so my question was a more typical or an average savings that an average Canadian would see would be under $200.
Right. So for that, when it comes to a tax rate reduction, it will really depend on the individual's circumstances, and that is specifically their level of taxable income, and also what non-refundable tax credits they claim, which already reduce tax owing.
The PBO had this pegged at under $200 as an average amount. I think 190 was the number, if I understand. Is that correct? Does that sound correct to you?
Like I said, it really depends on individual circumstances. Like on average, I mean, it depends on your claims of non-refundable tax credits, your average taxable income. So I can't speak to whether or not the PBO's numbers are accurate.
All right. The tax fairness for Canadians relies on every taxpayer paying that which they owe under law. Is that does the department agree with that? That all taxpayers must pay what they owe?
I mean, I think as a general statement, yes. I mean, we agree that
Okay.
under the law.
So offshore tax filers have had enormous advantages in the tax system. There was a damning Auditor General report almost 6 years ago that pointed out that the department often gave months or even years for offshore filers to comply with requests for information, where a Canadian tax filer would automatically be assessed their the full amount owed whenever there was a request for information that wasn't complied with in 30 days. Is that still the practice at the CRA?
I mean, I'm at the Department of Finance, so I can't really speak to the CRA's practice. I don't know if one
Well,
of my
perhaps
colleagues
the
here
CRA
can,
officials that
but,
are here could comment on that.
I think so.
20 minutes?
I think the question is how information requests are treated for non-residents versus Canadian residents. So I think, I mean, under the law, there's no different law for someone who's offshore versus.
Okay, well, the Auditor General identified that the practice of the CRA was to give additional time for compliance, months or years. In fact, often writing off or just rescinding a request for information when dealing with a complex offshore filer, whereas a domestic filer with a simple return, if they don't give the information that's requested by CRA, the CRA would just assess the tax amount in question. So is that still the current practice of the CRA?
Thank you, Mr. Chair, for the question. Although the question does not relate to Bill C4 or its provisions, I can confirm that the CRA has addressed the recommendations of the Auditor General, and we have clarified the timelines for information requests for non-residents.
All right. I'd like perhaps if you could get back to the committee and if you've got any way that we can show and document how the timelines have changed since that Auditor General's report. But I want to get back to C4. C4 is an affordability measure, and as I said, tax fairness is important to Canadians. Individual Canadians pay a lot of income tax and expect tax fairness. So we have seen the use of tax havens by businesses, including Brookfield, the company that the Prime Minister until recently chaired, which set up offshore tax funds in offshore tax havens, Bermuda, the Cayman Islands, and will the tax collection measures of this government capture these offshore filers and ensure that businesses are not able to avoid paying Canadian taxes?
So, Mr. Chair, there's nothing in this bill that speaks to offshore taxes or to collections. I mean, the Department of Finance has, that is something that we, are continuously working on. There have been measures announced in recent years to implement rules that do deal with offshore tax, but we're here to speak about the measures in C4, so we don't have the people here who would be best positioned to speak to those measures or to those other things that have been proposed over recent years.
Thank you. That's time. And if the witnesses have anything, that they don't have answers for things today, they can always submit them afterwards as well. So we're moving into the next round. It's Jake Sawatsky for 6 minutes.
Thank you, Chair, and thank you to all the witnesses for coming in today. We appreciate your time. Young Canadians are oftentimes having difficulty getting into the housing market. And so who exactly is eligible for the tax relief when it comes to the houses? Is this legislation mainly targeted towards young people?
Hi there. Thanks for the question. It's not targeted to young people per se, but it is targeted to first-time home buyers who, on average, tend to be younger Canadians. So the people that would qualify as a first-time home buyer have to be Canadian residents or Canadian citizens, rather, or permanent residents. They have to be at least 18, and they have to, when they take possession of the home, not have owned a home in that year or any of the previous 4 years. And their spouse or common law partner also could not have owned a home in that year or the previous 4 years.
Thank you. And so I'm just curious if you could maybe elaborate on why is it for first-time home buyers who haven't owned a home in the last 4 years? And could this possibly exclude younger families who might have maybe had to sell due to financial hardship, but maybe still face affordability pressures?
The 4-year marker, it's 4+ years, was chosen because it's consistent with other programs under the Income Tax Act that deal with new housing. So the First Home Savings Account, for example, and the Home Buyers Plan have a similar time test. This also limits the amount of time that the CRA has to look back in terms of how long it is since somebody's owned a home. As to your question as to whether or not to be shorter, again, we're striving for consistency with the other definitions.
Thank you. And then, so when the GST rebate stops at 1.5 million, so in high-cost markets, like, of course, Vancouver or Toronto, some starter homes are actually above this threshold. So is it possible that this policy might unfairly leave young Canadians in certain regions with higher prices behind?
So the $1 million threshold actually covers over 97% of homes purchased by first-time home buyers. There's only about less than 3% that are above the 1 million mark. But that extra buffer from 1 million to 1.5 million, where you get partial relief, was introduced in recognition of the fact that there are those markets like Vancouver and Toronto where prices are higher.
Thank you. So just kind of coming back to affordability in a broader sense. So this to ensure the affordability, is it possible that this might just be absorbed into higher developer profits, or how can we make sure that this is passed through into affordability rather than just inflating prices?
Well, one of the key advantages of doing a first-time homebuyer rebate, which is only available to a certain portion of the market, is that if first-time homebuyers prefer, they could always just not say they're a first-time homebuyer, negotiate a price on their home, and claim the rebate directly with the CRA. However, if they're comfortable assigning the rebate to the builder, they can do so, perhaps after negotiating a price on the home. So we're fairly confident, given the design of the measure and the fact that first-time home buyers don't have to discuss the availability of the rebate with the builder, that most, if not all, of the relief should go to the first-time home buyer. There are other designs that could be considered where that would be a bit more of a risk, but in this instance, we're fairly confident that the relief will go where it's intended.
Thank you. And so I'm wondering if you might be able to give any kind of projections as to how many additional young Canadians will be able to buy a home as a result of this rebate.
So we've estimated that the first-time homebuyer rebate will apply to 47,000 new homes, and we estimate that first-time homebuyers represent about 30% of the market.
Thanks. And so, given that this also applies to new builds, so what does the government expect its effect will be on supply for, like, when we're building homes that young people can afford?
I'm sorry, can you say your question again?
So this measure only applies to new builds. Is that correct?
Yes,
Right,
only to new build, because GST only applies to new builds.
Right. So what will that have on the supply of houses?
So the relief is directed towards new builds, which of course have GST. Existing housing, GST doesn't apply to existing housing for the most part. And because it's directed at new homes, this incentive, which is fairly generous, is intended to encourage first-time home buyers to consider a new home rather than an existing home. And so that should increase demand for the new home market, which there should be a supply response from builders who will then construct new homes to meet that additional demand.
Thank you. So I guess we've been talking a bit about buying houses, but of course many people are renting as well. And so a lot of young Canadians are not yet in a position to buy. And so how would this measure help Canadians who are paying rising rents that can't realistically afford a down payment?
Well, this measure doesn't directly help people who are renting in the sense that the benefit flows to people who are buying homes, but it could indirectly help people who are renting if it, to the extent that it increases the supply of homes more generally. But more importantly, a huge relief measure was provided back in 2023. The government introduced the purpose-built rental rebate, which provided a 100% relief on the GST for purpose-built rentals. So that should help spur the construction of more rental properties. And again, more supply generally results in lower rents.
That's time. Next, we have Mr. Garon.
Merci, Monsieur le Président.
Thank you very much, Chair. Ladies, gentlemen, thank you so much for being here with us today. I'm going to begin with a question on the portion of the carbon tax for the Department of Finance. During the election campaign, it was stated that the measures that you find in C4, that they would suspend the carbon charge, but the payments of the payback on the carbon tax, I know that you're following the issue, but that the repayments were paid out in advance. Can you tell me if the last payment of the refund that was paid out just a few days before the election was done so with a carbon tax that had been planned for beforehand, or was it just done on basically the spur of the moment? Thank you. I can begin answering your question. Two things. The reconciliation between what is and what can be collected in terms of the fuel charge and the payments or the refunds that were paid out again as incentives for climate action is something that is always done after payments are made, after they have taken place. So in all terms of payment, I'm interrupting you because you're not answering my question. I have a document here from Finance Canada that says that according to the policy to put the fuel charge products in place before the quota, before a given quota, you have to provide for that. So is it paid before it is collected? This is what I want to know. I was going to say, yes, it has to, and then it is consolidated. Well, yes, thank you very much. But I'm not interested in accounting. Liberals have taken some $114 million from Quebecers. It's a robbery. It's highway robbery. And I thank you for your answer because it's going to help me answer. Now, concerning the first-time home buyers, I know you are trying to do something good, and it is a good policy. But in Mirabel or in Quebec more generally, people aren't getting the refunds back. I get calls about this all the time. But when we ask questions about it, and people query what is happening, they're told, well, we don't pay back the refund right away. They have to wait. There's a Ways and Means motion that has to be dealt with, and so on. In my riding, which qualifies, how can it be that the functionaries don't know what they're talking about? The authorities are there to put in place the payback. But the bill that you have in front of you has to get royal assent first. A Ways and Means motion, what is that? A Ways and Means motion only provides for a partial payment. So when the government tells us that it's already being applied, that it's in effect, it's not quite true. It's not quite precise. The payments will be retroactive to May 27th. Will there be interest paid on that amount? The people in my riding, you know, they buy a house and they want to qualify. They say they start the negotiating off in March, and then they call me. They're saying, look, something's wrong here. Feet are being dragged. You know, people are driving their feet. Thank you. Let me just speak for the CRA. With respect to all tax measures, all fiscal measures, they fall under a Ways and Means motion. But a Ways and Means motion cannot give the authority to effect a refund. It has to depend upon the passage of the legislation. It has to become a law, and that will be retroactive to the 27th of May. Okay, that satisfies me. I understand your answer. The tax base for people, or the first bracket I'm referring to, where people are taxed, you've referred to that. There will have an effect on some non-refundable tax credits for certain groups like the handicapped, for example, people living with disabilities. We hear from these groups that this tax basis will also reduce the amounts that they will get because of their having to live with a disability. What can be done to help these people? We say that we're helping the middle class, but and people who are perhaps in a lower tax bracket through tax changes. But I'm talking about specific groups like those who live with disabilities and fall into or even under the first tax bracket.
The government, the Department of Finance, is aware of the concerns from these stakeholders. We are conducting our analysis and considering options. If I could, I just want to provide a quick background on exactly what's happening here. So the first tax rate is linked to the non-refundable tax credit rate. So when the first tax rate goes down or up, same thing happens in parallel with the credit rate. The purpose of the linking is to offset the tax on the income that is used to pay for whatever expense is related to the tax credit the person is claiming. And we use the lowest rate for that because everybody, everyone who pays tax, irrespective of what bracket they're in, they will pay they will pay the lowest rate on at least a portion of their income. So it's a principle of fairness in the system. And it also ensures that people claiming similar credit amounts receive the same tax relief irrespective of their level of income. So, so consequently, that does mean that anyone who claims a non-refundable tax credit, in 2025, that rate will go from 15% to 14.5%, and in 2026 and future years to 14%.
Thank you. That's time. We're moving into our second round, and first we have Mrs. Kobina. 5 minutes.
Can you tell the committee how many homes have been built in Canada over the last 12 months?
Off the top of my head, I don't know. I'm assuming it's in the high 200,000s.
Sorry, how many?
Off the top of my head, it typically runs somewhere between 200,000 and the high 200,000s in a given year. I don't know what the specific number is for this last 12 months.
Just in the past 12 months.
Like I said, I don't have the specific figure
Okay,
for the
no
past
problem.
12 months, but generally it's around, let's say, 250,000 per year.
Okay. And of these new homes built, how many are less than $1 million and being purchased by first-time home buyers?
So I have a chart for that. Okay, so we're not looking at the 250,000, just so you know, because a certain portion of housing starts are purpose-built rental units, and those aren't included in the calculation for purposes of this rebate.
Okay.
But among the ones that are, actually, I don't have the total here. I can get that to you, but the idea is 97% or so are under $1 million, and 3% are between $1 million and $1.5 million.
And given that the homes above $1 million are not eligible for the 100% GST rebate, would you agree then that the majority of the first-time home buyers in large urban centers like Toronto, Vancouver, Montreal would actually not benefit from this rebate?
No, I don't think that's true. First-time home buyers in Vancouver and Toronto, they might not be buying single-family homes. They're probably buying condos, newly built condos, when they're buying a newly built home. So in general, even first-time home buyers in the more expensive markets are expected to benefit from the rebate.
Okay, so has there been a statistically measurable increase in housing starts that can be attributed directly to the GST rebate policy?
We don't have figures like that, and the reason is because when you introduce a measure like this amongst many other measures that are being introduced, not just tax measures, but other types of federal measures, and not just at the federal level, but you've also got measures being introduced at the provincial and municipal levels. And then you've got a variety of factors that have nothing to do with the government at all, such as interest rates, economic conditions, the availability of labor, cost of inputs, et cetera. Those all impact housing prices, and of course, in turn, those impact demand. So it's very difficult, if not impossible, to put a precise estimate on the number of new builds that will be created as a result of this one singular measure. However, directionally, we expect it to increase demand for new homes by first-time home buyers, which that increased demand, if those new home buyers are encouraged to buy a new home rather than an older home, for example, that has no GST on it, would be expected to generate a supply response from builders.
Mm-hmm. So, on the flip side, has there been any observable reduction in the average home prices or rents since this rebate was introduced?
We wouldn't expect a reduction in the price of homes as a result of this rebate, because the rebate is claimed directly by the purchaser of the home. And like I said, the purchaser doesn't even have to disclose that they're a first-time home buyer to the builder. So the builder is going to charge what the builder is going to charge, whatever the market price will bear, whatever the market will bear, and then they can either assign that rebate to the builder and have it reflected in the contract, or they will be able to claim it directly with the CRA.
Thank you. Can you confirm whether the CRA can legally administer or apply a tax change before Parliament has passed the enabling legislation?
I'd like to defer that to my CRA colleagues.
Okay. Thank you, Mr. Chair. Thank you. So as mentioned previously, in the case of a rebate or a refund, the CRA must wait for royal assent of the enabling legislation. And so the CRA is not able to speak to the impact of the measure nor speak to its application since it is still being considered by Parliament.
In the case of the digital sales tax, the CRA began collecting the tax before the legislation received royal assent. Can you confirm that the government later had to refund those collections because the law wasn't yet in force?
10-second answer, please.
10 seconds. So refunds require royal assent, and so those have not taken place.
No.
Can I clarify my question?
That's time. Next, it's Mr. Lavoie.
Thank you for being here today with us. I'm very happy to be with you as well. It would be very interesting to be able to question you about another area. I worked for 20 years in banking and purchasing of houses and all of this. I'm very familiar with because I often had to deal with young families. But you're talking about up to 50,000. We know that the purchase of a house for a young family is something that they do to build their future. And we know that that represents a large part, 37 or so % of the market. Just to follow on my colleagues' interventions earlier with respect to the GST and rebate, that will be applied backwards to May 27. Am I correct? When the measure passes Parliament, the rebates will be paid out by the CRA under an eligible contracts, but it'll be backdated to May 27. So the banks are taking this into account. I speak from my 20 years experience in banking. So it will be backdated to May 27. And they'll be told, the first-time buyers will be told by the bank that this is happening. Are we understanding each other? Are we talking about the same thing? Well, you know, it depends on each purchaser. Yes, but they can benefit from that as of May 27th. They are not going to be penalized in any way. They're not going to be able to say that they weren't able to benefit from this $50,000 because of some sort of administrative slip-up. My other question deals with the reduction for the middle class in terms of the tax rates. We all know we all know about stability and so on, but are there certain events, maybe other events that could happen, things that are not foreseeable or predictable today that could have an impact on the measures that we are undertaking today that could affect our fellow citizens? You know, the unpredictable, could that affect we only have to look to the south, to our neighbor there, to see what unpredictability can do. Do you see a situation in which something like this could occur? Thank you, Chair. I'll answer your question in part. With respect to the drop from 15 to 14%, the drop is effective as of July 1, and that means a rate of 14.5 for 2025. What the CRA has done, so it could take effect as quickly as possible, is to have contacted the payments entity so that they could adjust the tables of rates so that could show these changes. Of course, if people change a job and there's no change that is made, or if there's no statement made, well, when they declare their taxes for 2025, that will be taken into account, the 14.5%. And the first part, is there an event or a decision that might be unpredictable today, say by the Americans, something done by the Americans or someone else that could have an effect on what you are doing? Thank you. For part two, I don't see the involvement I think the key parameters are already contained in the legislation as to its application. That will be as of April 1st. So I don't really foresee any unpredictability. So you're telling me that there's no situation. The approval, royal assent of C4 is what is required. Thank you very much.
Thank you. Next, we have Mr. Garon for 2.5 minutes.
I didn't work in banking for 20 years, but I've been a member for 4 years. People call me and they say, we call the CRA and we're told that the rebate is not available to us. Everybody is waiting. And in the meantime, their bankers are making them pay interest. So that is something that was affected by the Liberals. Now, before bringing in a budget, they brought in an election. They called an election. And since they promised all kinds of things, innumerable promises, here we learn today that from the CRA, the Ways and Means motion involved is that there should have been a budget before the summer, which would have allowed for the speeding up of the rebate. So how many Canadians, how many Quebecers qualified for the GST on new homes but didn't receive it yet from the government?
That could be directed towards CRA, but I'm not sure they would have those numbers available.
OK. Donc, je sais, vous l'avez dit tout à l'heure que vous les avez
I know because you said earlier that, that you didn't have the answer, and I don't want to waste your time. There are a certain number of people that qualify, but thank you for the question. People are making their applications. To say that they've missed the boat is a false question in a sense. Okay. Mr. Garon, if I might answer. At the CRA, we've only received eight applications. So that means then people have understood that they have to wait. But I find it a bit odd, nonetheless, Chair, that we have the officials here, and fairly so, they don't have the data with them to be able to answer our questions about rebates, and yet there's somebody else here who can.
We're moving into the third round now. We have Mr. Lefebvre for 5 minutes.
Merci, Monsieur le Président.
Thank you, Chair. And thank you all for being here, for coming here to answer our questions, because our questions aren't always easily answerable. Bill C4 deals with 3 commitments that were put out by the Conservative Party during the election campaign, suppressing the carbon tax, taking off the GST from new houses amongst them. So, but the difference is with respect to the level of expenditure. We say for every dollar spent, there should be a dollar saved. But here's my question. What is going to happen if the government continues to log in deficits like it's doing, as we heard this week? Chair, thank you. This is really a question that's outside of our purview. We are limited by what is in C4, and I don't really think that the officials here at the table can answer that question. Chair, I do have another little question for you. In C4, it has been announced that there would be savings. Will there be savings in terms of the public service so that we can pay for these income tax reductions? Once again, Chair, this is a question that is outside of our purview, beyond the scope of what is found in C4. And we are limited by what's in C4. I'm sure Minister Champagne, I know, in November will be bringing in a budget. Those questions perhaps would be better placed there, but for us around the table here, we really can't answer. Chair, the tax reduction, how do you think that that will stimulate economic growth? Will I have a little bit more success in posing my question this way?
So, as mentioned, lowering the first tax rate will provide people with a little bit of tax relief, less than what they would have been paying under the 15% rate. In terms of economic impacts, I mean, that really depends on how people choose to use their savings. So whether that's through additional savings or additional consumption, I mean, these are the two ways that economic growth could be stimulated. We don't have any particular projections on exactly what people's behavioral response to the rate change would be, but generally speaking, this is how these are the channels through which there would be economic impacts.
Si je pourrais ajouter,
if I could just add this with respect to the rebate, the fuel rebate, since it was already set out through regulations, of course, we estimate that for the regulations, the elimination of the fuel charge increases the GDP by 0.2% by 2030. I had come back to the PBO. He says the most important thing is the debt to GDP ratio that has to be taken into consideration. It's the first time in 30 years that we have seen this sharp increase in the debt to GDP ratio. It is unsustainable. This is what he said. He closed by saying everybody should be concerned. I am concerned, and I ask each of you this. Are you concerned or not?
On peut partir de la droite à gauche.
We could move from left to right, or right to left, if you like. But Chair, we are here as officials. We can't speak for the Government of Canada. We are here to explain technical details, not policies that have been set out by the government. We are not authorized to express our opinions either in our testimony before the committee.
That's time. Next, we have Mr. Turnbull.
Thanks, Chair, and thanks to all the officials for being here today. I appreciate the work that you do day in and day out. And I understand that, there are questions that, politically you can't answer, but in terms of the details of this bill, I'd like to ask Ms. Rizzo, so the GST rebate is not in effect yet. It needs royal assent. That's what we heard from you. Can you just confirm that? I think it was Ms. Rizzo. I'm sorry.
I think it was my counterpart, Madame Rowe, but yes, that's correct.
Great. So obviously you don't have a list of the number of people that have applied in Quebec, obviously, because it's not in effect yet.
The other thing you have to remember is that with the residents in Quebec, it's administered by Revenue Quebec, not the Canada Revenue Agency.
Okay, great. And let me just clarify on the GST rebate. So we heard that it's about approximately $50,000 on a home, $1 million or less. That's the equivalent value or cost savings. I also wanted to clarify in terms of when this sort of cutoff is set. So if you've pre-purchased a condo or home that's not been built yet, are you still eligible to get the GST rebate?
If you entered into an agreement on or after May 27th, you're eligible regardless of when the closing date, well, the closing date has to occur within a period of time, but you have years. But really, it's when you entered into the agreement.
Okay.
It doesn't matter that it's a pre-purchase or not.
Okay, great.
Yeah.
We also heard that from testimony previously, which was, I think, 97% of new home purchases were under $1 million. Did I get that right?
Yeah, a little over 97%.
That's a significant amount. I wouldn't have necessarily expected that, but that was helpful. And you indicated that there would be a demand response, or that you expected a demand response. I'm trying to understand how this measure fits within a number of other measures that were brought forward previously by the previous government. So the tax-free savings account, the cut to mortgage insurance, which I think was 25%, 30-year mortgages, the home buyers plan, which I think allows you to take $35,000 withdrawal out of your RRSPs to purchase a first home, and then a first-time home buyers tax credit. So have we done an analysis of how all of these things add up for a first-time home buyer? Because it seems to me there's quite a significant number of cost savings to, obviously a 30-year mortgage doesn't really save you money, but it does on a monthly payment basis for sure. Have we done an analysis of how those in combination would really amount to a significant amount of support? How significant would that be?
It is fairly significant, and we did look at it. Unfortunately, I don't have the number right in front of me, but I could provide you with that number in follow-up if you would like. The largest portion obviously comes from the first-time homebuyer rebate, because it can provide up to $50,000. I would say the next in line would be the first home savings account and a home buyer's plan after that in terms of savings.
And the mortgage insurance is pretty significant, 25% reduction in mortgage insurance. I'm not sure exactly how much that is, but I seem to recall it's in around $10,000 or more dollars. At least that was my impression. So would love some clarity on that. Lastly, maybe I'll just say that I've had numerous conversations with individuals concerned about their taxable income being reduced when claiming the disability tax credit. And so recipients, I'm sure, want us to address that issue. And I know that the department, Ms. Bartucci, I think you said that they're looking at a solution for this. And I think we need to all take that issue seriously. I know I do. Can you just comment briefly?
Sure. Yeah. Basically, we've heard the same concerns from stakeholders in the disability community. We're considering that, doing our analysis, proposing options.
So great. So I think hopefully there are options to actually address that issue, because I think we can all agree that individuals with limited income that get that disability tax credit can't afford to lose any of that precious income. Lastly, federal fuel charge didn't apply to Quebec. Is that correct?
It is correct, yes.
So so BC and Quebec were the only provinces, as I understand, that had their own system and that were not federally backstopped?
The third jurisdiction was Northwest Territories that had their own carbon tax.
So how could the money collected by the province of Quebec be owed somehow by the federal government? Does that make sense to you?
Just a short answer.
Doesn't
please.
make sense to me.
That is a good question.
Okay, well, that's it. I want to thank the witnesses, and we will suspend now for a few minutes to switch over to our next panel. Welcome back, everybody. We're going to be resuming the meeting. I'd like to welcome our witnesses for the second panel. We have, as an individual, Kim Moody from fellow Chartered Professional Accountant. We also have Isabel Demers here in person, who's the Vice President of Development, Public Affairs and Innovation Strategic. And we also have Mike Moffat, who's the founding director as well. So all virtual witnesses have conducted a mandatory witness onboarding test. I'd like to take a few comments make a few comments for the benefit of the new witnesses. Please wait until I recognize you by name before speaking. For those participating by video conference, click on the microphone icon to activate your mic, and please mute yourself when you are not speaking. For those on Zoom, at the bottom of your screen, you can select the appropriate channel for interpretation, either Floor, English, or French. For those in the room, you can use the earpiece and select the desired channel. A reminder that all comments should be addressed through the chair. You will have 5 minutes for your opening remarks, after which we will open the floor to questions. So we'll start with Kim Moody for 5 minutes, please.
Thank you, Mr. Chair. Good afternoon, committee members. My name is Kim Moody, and I am appreciative of the opportunity to speak before you today. I have a long history of serving the Canadian tax profession with a variety of significant leadership positions. I continue to do that, and I'm a prolific writer on taxation matters, including writing a weekly column for the Financial Post. Today, I'd like to briefly comment on whether the Bill C-4, lives up to its title, an act respecting certain affordability measures for Canadians, and another measure, and offer some suggestions for improvement. But before I do, all committee members and witnesses that have appeared before this committee obviously know that Bill C-4 is not yet law, and that's why we're here to discuss and allow the parliamentary process to run its course. But if you believe the messaging from government, this bill is indeed law with respect to the proposed 1% tax cut for the lowest personal tax bracket. In my view, such messaging is misleading, and it's only possible because of the CRA's current policy on the provisional administration of tax proposals that I have written about in one of my recent articles. Canada's overall financial literacy needs to improve in order to make good financial decisions and be better informed come election time. Trumpeting that the proposed 1% tax cut is law when it is not is misleading politics and does nothing to advance the important objective of improving Canadians' financial literacy. The CRA's policy should not be used to suggest such provisions are law until they are. Anything less undermines our parliamentary process, and in my view, this needs to change. With respect to the simple question of whether or not the bill lives up to its title, the short answer is no. While the government states that the maximum tax savings for the 1% tax cut is $400 per person, the more important statistic is what the average savings will be for Canadians. The Parliamentary Budget Officer stated in its June 18, 2025 costing note that the rate change will save tax filers an average of $110 in the next year and gradually increase to an average of $200. So let's be generous and say that it's $200. For average Canadians, that's 55 cents per day, less than the cost of a daily cup of coffee. And to suggest that this tax cut will make a material difference in Canadians' quest to deal with affordability issues, including the millions of Canadians who already don't pay federal income tax, is silly. It won't. And for some who suggest that this immaterial tax cut is tax reform, well, think again. It's not. More on that in a bit. While I think tax cuts are necessary to deal with affordability, productivity, and competitiveness issues, this minuscule tax cut is not it. It needs to go much further. And to balance such revenue loss, significant expenditure reduction by government needs to be completed. The proposed conservative tax cut of 2.25% that was put forward during the recent election campaign, combined with government expenditure reductions, would have been a much more significant step in that direction. As mentioned many times in my writings, a more meaningful and critical tax cut for the country would be to eliminate the highest personal tax bracket that was unnecessarily introduced in 2016. That introduction included messaging that asked high-income earners to pay just a little bit more, an offensive speaking point when one understands how much high-income earners already pay when compared to the whole of Canada. Our country's high personal tax rates stifle productivity and competitiveness, and as recently reported by the Fraser Institute, Canada's top combined statutory income tax rate ranks 5th highest out of 38 OECD countries. These personal tax rates have contributed to an exodus of capital and successful Canadians leaving Canada, and we need to stop this. Before I offer suggestions for improvement, I'll quickly comment on the proposed GST measures in the bill. While a GST holiday for new home purchases can assist with affordability measures, to restrict it to first-time homebuyers significantly reduces access. It's not only first-time homebuyers that are struggling with affordability matters. There are numerous reasons why existing homebuyers may desire to or need to purchase a new home. Why restrict this to only first-time homebuyers? So how do we improve our tax system, improve affordability for Canadians? Is it with immaterial personal tax cuts? No, it's with tax reform. As many tax practitioners who have appeared before this committee over the years, who have previously stated, our income tax statute is a patchwork quilt and a mess. It's tired and tattered and full of political measures, such as the prohibition of deductions on certain short-term rentals and the recent amendments to the alternative minimum tax. These are counterproductive and ineffective policies and contribute to the fact that our tax system is far too complex. A key objective of tax reform should be to simplify and remove obvious ineffective policies, but should also encompass big bang personal and corporate tax reforms that incentivize investment in Canada and make a real difference in improving the affordability of average Canadians. I was hopeful that the tax reform task force proposed by the Conservatives during the election campaign would have been that step in the right direction. While the Liberals have proposed an expert review of the corporate tax system, such a proposal does not go far enough. Corporate tax revenues are approximately 17%.
Mr. Moody, that's time. You can continue your remarks once we start the questioning. Next, we have Ms. Demers.
No problem.
5 minutes, please.
All right. President, Monsieur le Président, membres du comité permanent.
Chair, members of the Standing Committee on Finance, on behalf of our association, I would like to thank you for letting us be here as part of your review of Bill C-4. Please note that our comments today will be limited to the portion of the bill related to GST rebate measures. My name is Isabelle Demers, VP Strategic Development, Public Affairs and Innovation at the APCHQ, l'Association des professionnels de la construction et de l'habitation du Québec. We have some 28,000 companies in the residential construction and renovation industry and acts as a driver of social and economic development by promoting sustainability and quality. It is the largest voluntary member in this sector membership in this sector in Canada. From the outset, our association welcomes the introduction of Bill C-4, one of the key measures announced during the election on March 20th. It is to offer the full or partial refund of the GST for first-time buyers of new homes priced under $1 million.
Households aspiring to become homeowners. However, in early June, the Business of Ways and Means announced that the GST rebate will be retroactive to May 27, 2025, and not to March 28, 2025, the day the government made the official announcement. At that time, confusion arose among many first-time homeowners. Several of them had indeed decided to take action and purchase their first home following the government announcement. Their discontent expressed to home builders is understandable. On parle par exemple de Michel, première achetée.
Take, for example, Michelle, a first-time buyer who had been living for several years in an affordable housing unit while we're in a working-class neighborhood and had to leave her apartment due to renovations and a rent increase. The financial impact of the measure means now she has to pay an additional $10,025. Or Karine, in her late 20s, who has managed to save her down payment since her first job in the current context. She had heard that the March 2025 announcement would mean she'd save $25,000.
Why was May 27 chosen as the start date for the GST rebate? And if not retroactive, why was it announced on March 28? The date appears to have been set arbitrarily without any clear justification. And therefore, the APCHQ is calling on members of the Parliament to move the effective date of the measure to March 20th, 2025, the official date of the announcement, rather than May 27. The legislative amendment would restore fairness among buyers and honor the original intent of the measure. Conversely, and all things being relative, the change would have a minimal financial impact on the government. Based on estimates from the Parliamentary Budget Officer, the APCHQ estimates that applying the GST rebate to purchase made between March 20th and May 27, 2025 would result in a cost of $53 million but would help nearly 2,000 more households across Canada. Becoming a homeowner means putting down roots, feeling at home, building a place to grow and thrive. Buying a home is often the most significant investment of a lifetime, and it is young families who are the most affected. Every financial support offered to them is a breath of air in a very uncertain economic context. This is why we believe that correcting the effective date to March 2025 is essential to support as many households as possible during this housing and homeownership crisis, while respecting the original intent of the publicly announced measure. Merci de votre attention à tous.
Thank you for your attention, and I'm available to answer any questions you may have.
Thank you.
It was less than 5 minutes. Next, we have Mr. Moffat from Missing Middle Initiative. 5 minutes, please.
Well, thank you for having me here today. I will speak to the first-time homebuyer GST rebate in Bill C4. Now, while it is a step forward, it should be expanded to match the existing GST rebate and apply to all buyers of primary residences. Taxes on new homes have priced the middle class out of the market. In 2004, I bought a new home in London, Ontario for $168,000. Back then, development charges, PST, and GST totaled under $16,000 after rebates. Today, those same charges exceed $110,000 on a similar home, a 600% increase in 20 years. If we add in other fees, land transfer taxes, and interest on development charge, the tax bill on a home today approaches the entire cost of the home that I bought in 2004. And in the GTA, that alphabet soup of taxes can top $300,000 on a new home. Now, the golden rule is that a middle-class family shouldn't buy a home that's worth more than 3 times their income. So for a $100,000 household, that's $300,000. So when the taxes alone on a new home are that high, we've priced the middle class out of home ownership. And sales prove it. In the GTA and Greater Golden Horseshoe areas, pre-construction condo sales are down 89%, and ground-oriented homes sales are down 70%. If buyers can't afford homes, they won't be built. Governments must cut input costs. And Ottawa has already acknowledged the harm of high housing taxes by rebating 100% of the GST on purpose-built rental construction. It has also recognized it through a commitment to lowering development charges. However, when the GST was introduced in 1991, a commitment was made to adjust the GST new housing rebate for inflation on a regular basis. Over 30 years later, and that promise has never been kept. And yes, tax cuts have fiscal costs, but inaction has bigger ones. A 2023 CanSIA report found that a $940,000 new Ontario home generates $110,000 in federal tax revenue. Based on CMHC housing start forecasts, a decline in owner-occupied starts in the GTA alone is projected to cost the federal government $2.4 billion annually. If we add Vancouver to that cost, the losses are in well of excess of $3 billion annually. That's more than the annual cost of Build Canada homes in lost tax revenue. And it's not just tax revenue, jobs are at stake. If this slowdown persists, as many as 100,000 housing jobs could be lost nationwide. Now, when 15,000 automotive jobs were at risk during the financial crisis, governments acted. We need the same resolve now. So there's 3 points I would like to leave the committee with. First, Canada cannot double housing starts if they're falling, and the CMHC projects housing starts to fall through 2027. We can't go up and go down at the same time. Point two is that inaction drains the revenue needed for housing programs. The very money you need to fund Build Canada homes is not going to be there if housing starts fall. And third, if housing is a human right, we can't keep taxing it like alcohol and tobacco. We can't keep taxing the middle class out of this market. I look forward to your questions.
Thank you. That was also below 5 minutes. So we'll move into our first round of questioning. First, we have Mr. Lefebvre for 6 minutes.
Merci, Monsieur le Président.
Thank you very much, Chair. And thank you to all our witnesses for being here with us today on Bill C-4. I said earlier, first off, it is a bill that deals with 3 commitments made by the Conservative Party, refunding the GST on housing, taking off the fuel charge. We wanted to go further, but it wasn't in the right direction. The problem was that we were talking about dollar for dollar, in that for each dollar spent on something new, there had to be a dollar saved. And we wanted to have a budget, but that just didn't happen. My question is for Mr. Moody. You're an accountant and you write about fiscal measures, tax measures. I'd like to hear you on what you think about what was said by the PBO, the Parliamentary Budget Officer, when he said the greatest concern is the gap in terms of the debt to GDP ratio. It's the first time that we've seen such a sharp increase. It is unsustainable in his view. And he said everybody should be concerned. I'm concerned. Are you concerned?
Well, thank you. Yes, I am concerned, obviously. I concern myself with taxation measures and look at increasing debt costs and the increased spending. And so, from my expertise, I often wonder how it's going to be paid for, given taxation policy measures. But overall, just, putting on my layman's economic hat, of course I'm concerned. It's when you have that kind of strong and blunt language, I think every Canadian should take notice.
Merci.
Thank you. My next question is for Madame Demers. And here I'll note this. My former conflict of interest. I was part of her association for quite some years. I was the owner of a manufacturing plant that built roofs. So I would ask her, how do you see we can help our entrepreneurs? If the Conservatives feel that it is important to diminish bureaucracy, to reduce bureaucracy, but what we need is shovels on the ground, people building new housing units, new homes, not just a paper burden. How can we reduce the paper burden to help our entrepreneurs and developers? Thank you for your question. And I didn't work in the APCHQ when Mr. Lefebvre was there, but I can say this. With respect to what can be done to help developers to build homes, our association has put forward a variety of measures, suggestions to governments over the years, and one of them is to reduce the tax, the GST tax for first-time home buyers. Another that was suggested was not just to work or to act, but to ensure greater accessibility to to housing through tax measures to say, reduce the stress test, allow greater access to reduced tax situations. That is something we suggested, the $2,500 per month every month, which would perhaps allow for better management and also better banking terms. There is another element, perhaps other elements that we made recommendations about. It would deal with not just access, but some way of stimulating the supply. So there has to be, for developers, a high level of predictability. It has to be made more simple. And also, they have to be able not just to have a one-size-fits-all approach, but rather a more flexible approach where that would take into account, say, energy housing. This is one of the aspects that would be able to increase the supply. And also, the regulatory burden has to be taken into consideration. You know, in Quebec, we have the interpretation of the code, which differs from region to region. So if there were an alignment, a harmonization there, that would certainly help. And also, you don't want to lose housing that has already been built. In Quebec and Canada, we want to build a supply of ready-made housing that would be available, something that is available already, that is built already, also that could be renovated. And that is very important, equally as important as new housing.
6 minutes.
Thank you. Thank you to our witnesses all today. I find it very interesting. I want to hear you all. My first question is for Madame Demers. In my riding, Beauport-Limoilou, near Quebec, we are near Quebec City and a bit in the suburbs at the periphery of the city itself. We have a lot of young families. C4 is what we are discussing. Do you feel that it is a good measure? And if you feel it's a good measure, why do you feel that way? You know, the GST factor is a measure that, as I have said, we have long asked for. The effect of the 15%, well, it's not just 15% of the GST, but the provincial portion of it, of the 15%, is cash. And if you have a citizen who pays for a good with taxed money, that money that is taxed already, and it is difficult to put aside an amount of money to purchase a good that is already taxed. So if you don't have any type of housing, there is no social or economic development. And also, what our organization is concerned about, the expectation was that it would happen from the time of its announcement, but that allowed some buyers to act quickly. They did so, and then they were very surprised afterwards to find out that 2.5 months later that it was going to cost them even more, because these poor people thought that it was from the date of announcement. So we would like to have the date roll back to the date of the announcement, not May 27th. Thank you, Ms. Demers. My question is for Mr. Moody. Thank you for being there with us today, Mr. Moody. I looked at recent articles that you've had published in the Financial Post, and I want to get back to some of the messaging that's in it. To encourage people to invest more, something that is often repeated by this new government. And it's something that, as a former banker, I am very aware of. But for the everyday person seeking to be a homeowner, if you buy, say, a car, a luxury car, but say they don't do that, but they buy a cheaper car and they take the $15,000 or so that they save by doing that into an RRSP. Would that be considered a good way of managing their finances?
Well, thank you for the question. And just off the bat, I find the messaging of spend less, invest more, very vacuous. As an accountant, it means absolutely nothing. And I think to most Canadians, it should mean absolutely nothing because it is. It means nothing. And when you combine that with the separation of the operating budget from the capital budget, that's very, very deceptive, which I've written and criticized quite often in my writings. Now, to answer your question, to put the savings, by buying a less expensive car into an RSP, for most people, I mean, obviously it would depend on the facts, but most people that would make some sense. Savings is typically always a good strategy.
Alors, ce que je comprends, c'est ça.
What I understand then is that we agree that it's good advice for a young family. Spend less on luxury products, put money aside to reinvest. A government can act in the same way as a young family does, ordinary people do. We will be careful as a government about our expenditures, and we will invest where there will be spin-offs, say, like in an RRSP. That was done in the past. We'll manage our money that way. And can a government then act in the same way? Make a choice about having expenditures today that are less high than in the past and putting things aside to provide for the future, invest in the future.
Well, I think the comparison to a young family that has the excess cash available to invest in an RSP versus a government that does not have the cash is completely different. When you are borrowing to spend more or invest, that makes absolutely no sense. And the comparison is just, it's unrealistic and not comparable.
Pourtant, les jeunes familles empruntent.
But young people borrow money to buy a house. They borrow money to buy a car. So it's comparable to the government. It's the same thing, isn't it? If you borrow $5,000 to buy a car, $20,000.
Or sorry, try that again. Was to take the savings and put it into an RSP. If you have the cash and you're putting it aside for savings, that is very good in most cases. But if you're borrowing to put into your RSP, I challenge anybody to show me the mathematics of how that might make some sense. In some cases, it might. And believe me, I've run those numbers many times throughout my career. But that's the equivalent comparison to what you're talking about with a government that wants to borrow more money to invest. And of course, the issue is, what does investment mean from a government context?
That's
not easy to define.
That's time. Thank you. Next, we have Mr. Garand for 6 minutes.
Merci, Monsieur le Président. Comme je pense pas que le
Thank
gouvernement.
you, Chair. I don't think the government is going to go back to study in a school or take its retirement or save for its retirement. Madame Demers, my question is for you. My understanding is this. The Prime Minister announced the measure, correct me if I'm wrong, on March 20th. Yes, that's when the announcement was made. Mr. Carney, at the time, was a candidate. It was a candidate for leadership. We were not in an election campaign. It was no. It was the campaign began on the 23rd. So So the Ways and Means motion could not come into play because the House was prorogued at the time. So given all this, what would have been the date March 20th? It was announced. You would think that it would be in the bill as well, the same date. Then we get into the election campaign, and 2.5 months were lost. Do you think that a reasonable person might think, and sometime that doesn't spend a lot of time here in Parliament, and I think they're the lucky ones, would have thought that it would have been the date, March 20th, in the bill? Well, I can't presume as to what people would think. But what I can tell you, our various proponents and our developers have said that they were taken aback by this dramatic change. They would have liked an explanation from the government that this didn't apply, the date didn't apply. They'd like to know why May 27th was the date in the bill. One thing that developers can't do, they can't cancel a contract to accommodate the purchaser. It's not allowed according to the regulations. Another thing is they can't accept a demand, an application to cancel the contract on the part of the purchaser because there are costs. There are all types of inherent costs, and then the purchaser might find something else on the market. It's not always that simple. So the developer does not necessarily accept this type of cancellation of a contract. But in any case, I'm interrupting you, sorry. But in any case, you want to simplify the life of first-time home buyers. That's the point. What people initially thought was not what happened, and there's nothing simple about that. There are probably reasons why the government decided to have these people lose 2 months. But do you have any idea of what that would cost the federal government, or at least for Quebec to roll it back to March? Well, not just for Quebec, but it's for Canada. It would represent $53 million. So that's 0% of the deficit. Well, you're the accountant, not me. Well, I'm not an accountant. My wife is an accountant. I'm not. Thank you. I'd like to know this. You spoke about pre-existing housing, and the lot that is chosen first, renovations that may well have to be done, certain housing units or certain houses have not really been ever renovated or very little. That all enters into play. But then there has to be, but there's also this need for an increased new supply. So to your mind, what are the main obstacles, the barriers at the federal level for people trying to access housing in Quebec? Well, if there were one simple solution to solve this crisis, it would be easy. But what you have to do is improve the programs so that they are more uniform, consistent, and easier to understand, particularly in Quebec. And the government has to help with the fiscal measures, the tax measures like the GST, the stress tests that I mentioned as well, improve CHMC, and if the supply is increased and if it can be made And if the announcement could be made by Building Canada Homes, it would be easier to make some progress. You want to build more, to build better, to build in a sustainable, long-lasting fashion, and you want to be energy conscious, to use energy wisely, using techniques and approaches that could do that. You know, you really, if you don't do all of that, you're looking to future problems.
Rounds first we'll start with Ms. Cabina.
Thank you, Mr. Chair. My questions are for Mr. Moody. Given your extensive work on taxation, my questions are about different groups of Canadians and the impact of the tax on them. So the Parliamentary Budget Officer reported that a single senior earning roughly $27,000 will only save about $50 in 2025-2026 from this tax cut. Do you agree with that?
Well, from a high level, yes, because most low-income earners, I wouldn't say most, but a lot of low-income earners do not pay any tax. And so at $27,000, they're paying a little bit of tax, but not a lot. So high level, yes.
And do you believe that the $50, which works roughly to $1 a week, will have a material impact on a senior citizen that's struggling with affordability?
Absolutely not, and I alluded to that in my opening remarks. Even if you're generous at $400, which is the maximum amount, that's immaterial to the average Canadian, or to most Canadians, frankly.
And a single parent now, different group, earning roughly $50,000 is expected to save about $140 from the tax cut. Do you agree with that?
From a high level, yes. I don't have the numbers in front of me, but yes, that sounds roughly right.
And the $140 a year works roughly to $3 a week. Do you think that this would change the life circumstances of that single parent because of this income tax cut?
No, obviously not. And that's why I think it's, this is, good politics, but poor policy.
Thank you. A senior couple now with an income of roughly $63,000 would then save $150 from the tax cut, which is, again, roughly $3 a week. On the same line, do you think that this amount will meaningfully ease the financial pressures for the senior couple?
No, obviously not.
And so a family of four now, who we learned spends roughly $17,000 in groceries, which is about $100 more than last year, would save maybe $360 because of this income tax cut. Do you believe that they would be better off because of the income tax cut?
Well, by $360, which is not material.
Offsetting the $800 that they spend more over last year, that would be that they're actually out $440.
And other inflationary measures as well, right?
That's right. So given that this is the signature legislation that the government is putting forward, and we talked about seniors not benefiting meaningfully, single parents, potentially students, unemployed people, what do you think would really be the benefit of this key Liberal affordability plan?
Nothing. Frankly, it's an embarrassment. If this is their key signature tax policy, it's embarrassing to Canada, and it should be embarrassment to anybody that understands tax, which unfortunately not many do.
Thank you. My next question is for Mr. Moffat. You spoke a little bit about the impact of the GST cut on on the housing crisis that we have in Canada currently. So we have learned that this GST cut will only apply to new homes that are less than $1 million, and only for first-time home buyers. How effective do you think this measure is in addressing the housing crisis?
Well, I think it certainly helps. Now, the GST only applies to new homes to begin with, so there's nothing to rebate on resale. The $1 million, for most of the country, it works, but it is a problem in the GTA in Southern Ontario and Lower Mainland BC, where a high proportion of new homes are over $1 million. So that portion of it does carve out some homes. I think the biggest issue is that it's only for first-time home buyers, which are about 20% of primary residence purchasers, and it leaves out some very important folks. Like, think of a couple that owns a one-bedroom condo that would like to upgrade into a three-bedroom home that's suitable for raising kids. You know, they have been excluded from this. Or seniors who would like to downsize into a new home, which helps not only them, but it frees up a home for the next generation of families. You know, they're not eligible for this. So I do think limiting it to first-time home buyers really diminishes the effectiveness.
That's time. Thank you. Next, we have Mr. McDonald for 5 minutes.
Yeah, good afternoon, and thanks to all the witnesses for joining us today. So this was our affordability measure, C4, and we've been asking a lot of questions on the housing. Mr. Moffat, if I may direct a question to you, one of the persistent challenges that you bring up in the housing market is the taxes and fees that different levels of government have been laying on homeowners or new home builders. How does removing the GST on new homes under $1 million help these individuals? Can you comment on that?
Yeah, absolutely. Well, because the GST only applies to new homes, it's basically at the end of the day a construction tax. It's no real difference than a development charge. So if you remove $50,000 of taxes on a new home, that makes it easier for families to qualify for a mortgage or save up enough for a down payment. So it's important to get those taxes, and you're absolutely correct, that is across all three orders of government. That, you know, when a modest three-bedroom home in London, Ontario, the construction taxes on those have gone up 600% in 20 years. I think we need to look at reducing those and getting them back down to more manageable levels.
And if I might ask, Mr. Mears, so in our affordability or C4, we have measures in there that are the GST cut, which could add up to $50,000 if it's $1 million home. We removed the carbon tax, and we also have the income tax cut. Whether people like it or don't like it, it's a measure that's going to reduce taxes for 22 million Canadians. So would you agree that these measures are going to help those first-time home buyers get into the housing market?
Thank you for the question, Mr. McDonald. So of course, C4, as mentioned, is a measure, the reduction of the tax, a measure that we support, and we're really pleased to see that the government went forward with it. But if we wanted to go further, then it would not only we would not only have to move the date for the date it was announced, but it would be to make sure that the tax reduction would be while the acquisition is made, as opposed to having people having to get a loan with taxes and get the rebate after. So it would be nice to see how we can rendre plus facile, to simplify the way that the rebate is provided. So that would be something. The other thing, it would be nice to see measure for students and elders also. They're not the first-time buyers, but they're really affected with the crisis, and it would be nice to see an opening in terms of the programs for them, if possible.
So that kind of leads, Mr. Moffat, another question for you. In your article that you published recently, you talked about the GST rebate to all owner-occupier purchases, and you stated that this would cover, if it was wide open, it would cover 60 to 65,000 homes annually, with a fiscal cost to the government about $2 billion. Where do you think the balance is with the federal government? Where do we strike the balance between expanding the eligibility of the program and staying within reasonable fiscal restraints?
Well, I think we have to cut. If we were in a situation where home building was in a boom, and then I think this would have a substantial net fiscal cost, and we could argue whether or not it's necessary. But right now we have home starts falling and home sales falling by 60 to 90% in our major metros. So with that reduction in sales in the GST and GVA, that's going to cost the federal government $3 billion annually if these trends continue. So I think we need to look at that. We need to examine, both the cost of action, which is about $2 billion, but also the cost of inaction, which is going to be in the billions as well. And finally, I would note that we need to hit 500,000 new homes. I mean, that is the target that the federal government has set. But if housing starts are falling by 4% a year, which the CMHC forecasts through 2027, we're not going to be able to double housing starts. So we need to do what we can to lower the cost of home building to allow us to hit those very ambitious housing start targets.
That's time. Next, we have Mr. Garon for 2.5 minutes.
Merci, Monsieur le Président.
Thank you, Chair. Madame Demers, I'll continue with you. You are representing a major portion of the builders in Quebec, residential builders in Quebec. On the ground, are there people for whom this applies, who are getting the rebates? Well, you can be sure that this measure has been long sought after and expected. That's the case for the majority of buyers. Yeah, but the people that you work with, they want to see this passed. Yes, absolutely. I'm going quickly because I have half the time of the others, and it's normal. Are there people that you know who say, oh, we don't have to be in a hurry. We don't have to be in a hurry to pass that. We could wait to even 2027. That'd be no problem. And the change of date, March 27, is not something that would affect us. Let me turn the question around. When you look at what's happening in Quebec, over the course of the next 10 years, we need to have 1 million new housing starts to reestablish affordability. And there are so many who have not had access to property since the Second World War. So given the present context, owning a house, being a homeowner, it represents economic stability for households. But the measures that will allow this type of mobility, that is to say, have access to home ownership, is important. Do you want to leave an apartment empty? So when you move from an apartment to a house, you're leaving that apartment empty for somebody else to access it. But definitely the developers want to see this put into effect. I only have a few seconds left. We have contacted Revenue Quebec, the CRA, and those people who say that, and yet asking about our rebate, but we haven't gotten our rebate yet. What do you say about that? Well, it affects people that signed a contract before May 26.
We'll start with Mr. Kelly for 5 minutes.
Thank you, and welcome back to the Finance Committee, Mr. Moody. In your opening remarks, you talked just a little bit about the need for things like tax simplification and the need for real, true affordability measures. I presume you might have been referring to we need to do something about productivity in this country. We've seen over the last 10 years a decline in per capita GDP, wherein Canadians are actually becoming poorer under this government. And in response to Ms. Cabina's questions, you laid out the insufficiency of C4 as an affordability measure. Can you comment further on some of these items that you touched on in your opening statement?
Sure. Thank you, Mr. Kelly. Yes. Where I was going with my final comments was, the need for tax reform that ultimately looks at a whole bunch of tax measures, which includes material tax reduction, both at, all the way through the system. Canadians pay far too much in tax. I've written about that many, many times, and I'll debate anybody that wants to challenge me on that. And so, and that to me is real affordability measures. The Fraser Institute, for example, does its yearly study of how much tax is paid, not just income tax, but all levels of tax, as a measure of total income. And it's an interesting review. And yes, you can debate the methodologies and the conclusions, but tax is far, far too high. And my conclusion is that by reducing those tax loads, that's real affordability measures.
Okay. You also talked in your opening statement about financial literacy, and that it is challenged by the method by which this government goes about tax changes. You testified at the Finance Committee late in the previous Parliament about the capital gains tax, which came to mind when you spoke of the chaos over introducing measures, treating them like they are as if they had royal assent, or at least leaving Canadians forced to plan as if these changes have royal assent. In that example, they abandoned that poor policy even before Parliament was dissolved. Can you comment on a little bit more on how to properly table and deal with tax measures and communicate them?
Yeah, happy to. I wrote a recent article in the Financial Post about that about 2 months ago. And it's interesting what history has history serves very good lessons. And in 1985, Finance Minister Michael Wilson introduced a really good paper, which I hyperlinked in the article for anybody that wants to take a look at it, about this very issue, about how to deal with provisional tax administration, because there is a need for it. But the problem is that right now it's being used for political purposes, like I mentioned in my opening remarks, and in inappropriate things like capital gains administration when it was very political hot potato. And so I think we should follow the example set out in 1985. We should have statutory provisions that clearly lay out how we should do that. And there's good examples in the UK to follow on that. So I think we've got a lot of work as a country to do that, Mr. Kelly.
Okay, thank you. I've got about a minute left. I'd like, Mr. Moffat, if you could clarify, you quickly went through some statistics in response to Mr. McDonald's questions about the state of housing starts. From what you had said in response to his question, sounds like housing starts are in free fall. Could you go through some of those statistics on the collapse of housing starts?
Yeah, so housing starts, the CMHC projects to fall by about 4% a year for the next couple of years. So it will be about 30,000 units lower than they were in 2023. It's housing sales, pre-construction sales, that are an absolute free fall. That in the GTA, condo pre-construction sales are down about 90%, and ground-oriented homes sales are down about 70%. And today's sales are next year or the years after housing starts. So that's why we're seeing housing starts fall in the future, because we're just not seeing those new home and pre-construction sales today.
That's time. Next we have Mr. Turnbull. You got the last round.
Thanks, Chair. Thanks to all the witnesses for being here. Mr. Moffat, I'm probably direct most of my questions towards you. Have often admired your work, and you've given lots of great advice on how we can solve for the affordable housing crisis in this country. So I appreciate you being here, appreciate your expertise and perspective. I would say I'm inclined to agree with you in many cases. In this case, I'm not sure whether I agree with some of your opening remarks, but what I wanted to ask you is, you said housing starts are projected to fall with the CMHC projections. I wanted to ask you whether those projections would take into account all the things that the federal government is proposing to do within Build Canada Homes initiative, some of which hasn't rolled out yet. I assume the answer is no, but could you confirm that for me?
I can't either kind of confirm or deny because I don't have access to the CMHC's modeling. Now, their forecast did come out in July, so I would hope that they would include those things, but their model is proprietary, so I don't have access to the assumptions.
Yeah, I'm wondering whether they would really have the details when details are still being worked out, and I guess that's why I would suggest that their projection couldn't have taken into account all of the things that would be rolled into Build Canada Homes, where we're, obviously the GST rebate is one thing that we're doing, cutting development charges, obviously municipalities as our partners, using federal lands, which lowers acquisition costs, encouraging Buy Canadian, which should shorten supply chains slightly, embracing innovation in terms of construction methods, modular prefab, et cetera. I'm not telling you anything you don't know, but I'm listing these things because they seem pretty significant to me. Approvals and permitting and speeding those up through the Housing Accelerator Fund, which we've heard from many municipalities across the country has been dramatically helpful. Interest rates, obviously, we don't control, but the Bank of Canada has also lowered some of the interest rates. And we've also committed to helping fund the housing infrastructure that's needed. So all of these things together, do you anticipate that housing starts will still continue to fall based on all of those measures in Build Canada Homes?
Yes, I do, at least through 2027. I think many of those measures that we certainly support, they will take time. They will take time to show up. That many of those involve homes that are in the kind of design phase. And remember that the CMHC counts a housing start when a foundation reaches grade level. That is often 2 to 3 years before sales begin. So part of it is how the CMHC measures what a housing start is. I would certainly, I hope in the upcoming budget that there are projections of housing starts that are provided by the finance department that do take those things into account. I think that would be incredibly helpful.
Okay, that's great. I also want to clarify, why would you suggest cutting GST for all home buyers? I think all home buyers that already have a home are ones that are accumulating equity. They're benefiting from the appreciation value in those homes upon resale. It seems to me that we're here talking about measures that can help first-time home buyers get into a market which they've been excluded from due to cost barriers. So I don't understand, we heard from officials just before you came that 97% of new homes are under $1 million. And another 3% are between 1 and 1.5 million. So this measure of the GST rebate really does target first-time home buyers. But so I guess I'm wondering, I don't understand the rationale for why we would want to help out individuals who have the benefit of owning equity in a home rather than target first-time home buyers.
Well, a couple of things. So first, the PBO has different figures than that 97%. So I would question those. We've seen different figures out there, but it's certainly above 90%. But I think the way to overall look at it is that we need to lower costs across the system. So, for example, if we made it easier for a young couple to move out of a one-bedroom condo into a family-sized home, that not only helps that family, but it also frees up that condo for the first-time home buyer. That housing is a system, right? And we shouldn't look at it as saying that, okay, we want to, make the water in this part of the bathtub warmer. We have to realize that what happens on one end of the housing spectrum affects the entire spectrum. And the government understands this because one of the arguments that the government has made on building social housing is that it relieves pressure on market housing, that, it frees up low rent market housing and puts downward pressure on those rents. So we have to understand that housing is a system. So it's not just helping individual people, but it's making the system as a whole work better.
That's time. Thank you to all of our witnesses. Thank you for taking it easy on me today. Is it the will of the committee to adjourn the meeting? Pat? Yeah? Meeting adjourned.